Hi everyone, welcome to another edition of the Lunar Orbit podcast, where I provide timely updates and fresh thoughts on the Terra Lunar ecosystem. My name is Gerry, and today is Friday, the 11th of March of 2022. In today's episode, we're going to be covering the leverage yield farms of Mars, more Bitcoin backing UST, and new lunar all-time highs. Okay, let's get into it. So first up, the Mars protocol, it launched about 4 days ago, and one of their offerings is leveraged yield farming. And unsurprisingly, those pools filled up within hours. So as we can see here, these are the caps, the temporary caps that they've got on these pools of assets that you can use to leverage yield farm. And yeah, they filled up very quickly. So I'm just going to explain a little bit about how this works. It's not hard to see why these filled up when you can see some of the returns that you can get. So the idea here is that you can come along with a single asset like Anchor, Luna, or Mirror and deposit that in as collateral and borrow the other part of the pair. So in this case, UST. So you could come in, deposit your Luna and borrow UST against it, form the LP, deposit it into Astroport and start farming the Astro rewards that you get. It's even better with Anchor because you get dual rewards. You get Anchor rewards, Astroport rewards, plus the swap fees. And that's why these percentages are so high. And it's reasonably low risk. It's only 2x leverage, which is not ridiculous. It's still something you'd need to manage. And on the next screen, it'll show you a good example of how this works. So given that Luna is almost exactly $100, it sort of worked out well for easy maths. So if I was to deposit 1.5 Luna as collateral, I could then borrow UST. And my 1.5 for Luna would equate to $154 US. I would then borrow that $154, pair it with the 1.5 for Luna in the Luna UST LP, and start farming those Astroport rewards. Now, I've got a liquidation here, a liquidation price. So if Luna was to drop in 40% of value, I would start to get liquidated. So 40%'s, it's a fair drop. It's got to get down to $59 from $100 pretty much before I'd start getting liquidated. So there's plenty of headroom to try and manage that. If you needed to, you would just, repay some of what you owe. But in the meantime, you're picking up, an excellent return. And that's why these farms filled up, in no time at all. Now, as I mentioned in previous podcasts, there's a contract-to-contract lending option that's going to be extended to certain protocols as voted on by Mars governance. So last week, Spectrum Finance announced that they were going to try and do a collaboration with, I think it's Alpha Finance Labs, who do Alpha Homora on Ethereum, and start using the contract-to-contract lending within Mars. Now, it looks like Apollo DAO is going to do something similar. Now, the beauty with the contract-to-contract lending, it's like a line of credit to another protocol where the other protocol doesn't actually have to stump up any collateral because they can see that their smart contract logic is going to protect them if something goes wrong. And also, these protocols have, quite a lot of assets to fall back on if something was to go wrong. So it's up to governance again to make sure that whoever they're vetting for this contract lending is, reputable and not going to cause any problems. So that's very, very cool. It's a very efficient use of money. In fact, you don't even need to put any money down. So it's just a great way for protocols to use Mars. So Mars is going to have a lot of volume go through these other protocols to create, leveraged yield farm type things, which is super encouraging. It's one of the reasons I'm quite bullish on Apollo. They have an awful lot of Mars token already from the lock drop. So they'll be able to help sway governance to help maybe boost their own vaults with the contract lending and get a higher return. And that's partly what all these governance wars are about. And that's in part why you would have seen the Lunar alts go crazy in the last sort of, 10 days or so. They've had some massive gains, which has been encouraging to see. Obviously, the Lunar price helps with that as well. Okay, so next up, I wanted to talk more about the Bitcoin reserves backing UST. Now, as you know, there was $1 billion worth of Luna essentially sold in exchange for Bitcoin with a bunch of venture capitalists, and they have like a 4-year vesting period, and their average purchasing price was $51, which 2 weeks ago looked really cheap, and now it looks like a complete masterstroke because, it's doubled in value since then. But the other issue is the demand for UST is just can't be satiated at the moment. There is just so much demand for UST that even the curve pool's being drained at an ever increasing amount. This is supposed to be 50% in this pool here, and it's been drained at more and more every day. People just want UST, and the only way you can get it, because you can't mint it, it's hard to mint it at the moment because there's actual caps on how much thing can be minted based on the algorithms. The only other place you can buy it really is out of this pool. So people are en masse swapping USDT, USDC, and DAI for UST, probably because of everything that's going on in the geopolitical environment. People are not trusting their banks anymore. This is probably the biggest risk to DeFi in general, is these three coins, USDT, USDC, and DAI, because they can and they have blacklisted certain accounts for various reasons. So UST demand's just going through the roof. And even though they keep burning or swapping, as they did last week, swapping UST into this pool, they've run out and have to keep doing it again. And still the UST gets drained. So this was just yesterday. LFG has added 418 million to its reserves. So that was the swap they did from UST to the other stablecoins. And it sounds like with that money, they're going to either market buy or maybe OTC buy more Bitcoin to back out the reserves, or potentially other assets as well. So they've kicked it off again. They've voted to burn the remaining 4.2 million Luna for UST to keep putting back into this curve pool. So my question mark here is, okay, Luna Foundation Guard is now going to be within 2 or 3 days. It won't have any Luna left in its treasury. So I'm fully expecting that Terraform Labs is probably going to come along with a nice big stimulus check and probably deposit a heck of a lot more Luna into the Luna Foundation Guard. Now, Doe and the team have mentioned for some time that they want to completely decentralize and dissolve Terraform Labs over time. And this is a way of them getting rid of their tokens without dumping on everybody, without affecting the market. In fact, they're bootstrapping the protocol and the ecosystem more and more by doing this. They don't actually need that Luna. They've got the founder's dilemma. They can't sell it. So given the unique mechanisms around Luna and UST, they can actually mint it into UST, and more UST means more Luna is burned, and they can use that UST to bootstrap other things like the Vertex protocol, that sort of thing. So really interesting how quickly this has all escalated just in the last few weeks. We've gone from having no Bitcoin to possibly having a couple of $1 billion worth of Bitcoin backing UST, and the demand's just going through the roof. So some other little bits of news here. Astroport, for a period in time there, it was the second largest decentralized exchange with outside of Uniswap. Now it's pretty close on this particular day here, so it wouldn't be surprised if it's back below PancakeSwap and Serum, but it does show you the network effects that we're starting to get. There's only 30 coins on Astroport, and it's only 2 months old, and it's already popped up to the second largest decentralized exchange by volume. So that's incredibly bullish. PancakeSwap is the biggest decentralized exchange on Binance Smart Chain, and Serum is the big one on Solana. So more and more we're seeing Luna ascend to being the third most dominant crypto behind Bitcoin and Ethereum. On top of that, we've had some more token listings with Kraken, now listing Mirror Protocol, and also Huobi have listed Anchor. Now, what's significant here is this is the native Terra asset, the CW20 token, not the Ethereum wrapped ERC20 token. So that's really promising, because we want people coming through the centralized exchanges going directly to Terra natively, not having to bridge across through Ethereum. That's a very unpleasant and costly experience. So this is great. More native Terra assets being listed on exchanges. Again, it just means the network effects get stronger and stronger, and that's being reflected in the price. So as you probably recall, around New Year's Eve, New Year's Day, we hit all-time highs in dollar value. And obviously we had a big crash back down to $43 from $103. But what's changed since then is we've gained value, and we're now well and above our previous highs in Ethereum and Bitcoin terms. As you can see here, it's just skyrocketing upwards. So it's leaving the rest of the market in its wake, really, which is quite incredible. The other thing that's different is at the turn of the year, we basically just topped 10 billion in UST market cap, and in less than 3 months, look at us. We're pushing up towards 15 billion. It's quite unbelievable. Now, a lot of this is in part due to Terraform Labs / Luna Foundation Guard burning a lot and also, buying up that Bitcoin reserve. But this all underpins the ecosystem going forward. So very, very bullish times. As we can see, Luna has now popped up the charts and it's now at number 6 overall. It's now flipped XRP as it's going to keep going up until it gets to number 3. And I feel like that's just probably a matter of months away. When I say number 3, I mean the third largest crypto, not counting the stable coins here. But that all plays into this narrative as well, because here's Terra USD, so UST at 14 billion. USDC is at 52 billion and Tether is at 80 billion. So there's an awful lot here that UST can start to take over. Now, the current geopolitical environment would obviously be playing into all of this. A lot of people just don't trust our banks anymore, especially after what we've seen in Canada. And then, of course, the issues in Russia and Ukraine at the moment. It's just the bull case for Terra just keeps on gaining momentum day after day. And I mean, there's still a lot of people in crypto that don't acknowledge what Terra is all about. Very bullish times. I think, not financial advice, but, hold on to your Luna. I feel like we've still got an awful long way to go and there's still so many bullish catalysts yet to come. If you like this content, please consider liking and subscribing and sharing with a friend. It really helps out with the YouTube algorithm. And thanks very much for watching.